myself completely crippled.
4 surgeries, trying to heal a detached retina.
Like, I can't eat. 4 years of this pain and throwing up.
In 2017, we had found out he had a tumor.
They wanted to do an operation because I had 90% block or 80% blockage in my heart. And I didn't want them to do it because they tried killing me the first time they tried doing that, putting in a stent.
I was born with muscular dystrophy, a rare form. There's 43 different forms, and mitochondrial disease, which is a genetic defect in every cell of your body.
But that man has not had a breath without assistance in over a decade.
Blood disease, liver disease, kidney disease, any disease. They brought unto him all the sick. And no matter what their sickness or what their disease, he healed them all.
He left here, took the oxygen off of his nose.
I looked at her and said, I can see all those holes.
Air test, and they said your respiratory function is above anything that we can imagine.
It was the last day that I used a walker.
Yes, I just believed it, and it happened. Just his words were so powerful. It just moved me.
When you touched me, it felt like when they gave me the injection with the stuff to go through to see what the arteries would block. It just all ran through, just hot as it could be.
And he saw that the tumor was gone. Completely gone, there's nothing there. The tumor looks like it's healed. The bone looks completely healed, like nothing was even there. There was no surgery that ever happened or anything on that bone.
You've already won the victory. Hallelujah. Shout it out, I've already won.
Why should you come to RTBI? The education that you're going to experience here is like no other. You're going to get a solid foundation on the Word of God, but you're also going to be exposed to the power that comes behind it.
I was listening to a Pastor Jonathan's sermon, and at the end of the sermon, he gave an altar call for those that feel a call into full-time ministry.
I decided to act and move and apply, and I got accepted, and I can assure you that this Bible Institute has taught me so much. They teach you the Bible, and they teach you the true, full gospel.
The fire of God is coming upon teenagers, college students that say, I don't care about the approval of Viacom and MTV and the movies. I've made up my mind. I'd rather endure the shame and disgrace of this world and have the pleasure of God.
And on that floor, I cried and I said, Lord, I know that you hear me. And the Lord spoke to me and said that if I won't move here because of fear, I will never go to the nations, because how much more will I yield to fear then? And in that moment, I knew that my life isn't going to be ordinary. In that moment, I knew that it was up to me how far I'm going to go with God, and that it's up to me if I'm going to make this decision. It changed my life forever.
First, I'm going to be strong in the Lord and the power of his might. So congratulations again for being what's right with America. There's enough principled people full of God's fire in this room to shut down every plan of the devil for this generation. You'll do what God's called you to do and be who God's called you to be for the rest of your life.
Brother Jonathan, Sister Evangelist, this is Stephan from Feed the Hungry reporting to you in Nicaragua. To everyone who's part of Revival today, I want to say thank you for answering the prayers of hungry people all around the world throughout this year. Because of you, the ministry of Feed the Hungry this year has just expanded to reach so many more hungry people around the world. We've seen about a 40% increase in our ministry activity. Because of you, millions are able to look up to heaven each and every day and thank God for food in their bellies and for food for their children. I'm in Nicaragua this week, and one particularly heartwarming story was a woman we met who is in a little village. She's part of the feeding, her kids are part of the feeding program, and in speaking with her, asked, what does this food mean to you? And she said, you can never understand what this food means to my children and me. And I thought about that for a minute, and it's so true. We have no capacity to identify that kind of desperation and hunger. She said, it used to be when I would put my children to sleep, they're crying. I'm a single mother. I put them to bed, knowing that they would have nothing to eat the next day. And I just put them to bed on an empty stomach. And their stomach is painful and they're crying because of it. She said, when the feeding center started and I saw the food there day after day, it gave me and it gave us hope. Thank you for giving hope to mothers, to children, to people in great need around the world. We've responded this year to the Ukraine war conflict with over 20 million pounds of food going into that region, into the hands of churches to give out daily bread to those that are praying for something to eat that day. We've responded in the United States with hurricane relief down in Florida, and right now, well over 425,000 children get to look up to heaven and taste and see that the Lord is good because of you.
This year, we're going into the wild.
If you haven't yet heard, our Radiance Women's Conference is coming up May 11th through the 14th. It's Revival Today Church's Women's Conference. You don't want to miss it. If you haven't registered already, make sure you visit revivaltoday.com/radiance. On Thursday, May 11th, we have service at 7. On Friday, May 12th, we have service at 10:30 and at 7 p.m. On Saturday, we have brunch at 10:30 with a Q&A, and we round everything out with a Mother's Day service with our very own Pastor Adalis at 10 a.m. You don't want to miss it. You don't want to miss a single second. Don't sit on your couch and watch from home. Make a point to be here in Pittsburgh, May 11th through the 14th. We'll see you there.
The Bible said, not just to ministry gifts, he said to all disciples, when you go and preach, heal all their sick. That the blood of Jesus has remitted my sins. We're living in the final hour of the last days. You don't have to finish how you started, and you don't have to end up where you are right now.
I would turn on the 24-hour broadcast and just stick it under my pillow at night. It was screaming faith and building faith in me.
Downloaded his app, Revival Today app, and I watched that whole week and learned more in that week than I had from anybody else in a long time. It touched me, and this ministry has changed our life.
I turned on Daystar on my husband's day off, and we're watching, and Jonathan came on. And when he came on, it ignited my spirit and my faith.
That's why I'm setting my faith that these next 5 years, the fire of God will burn through this nation. From Boston, Massachusetts to Maui, Hawaii, from Wasilla, Alaska, down to Laredo, Texas. The devil's not going to have this generation. America shall be saved by the power of God. If you stand with me on that, give Jesus a hand clap. Let the devil know that he has some opposition.
Coming to you from Main Street, America, in the heart of Rust Country, home of industrial titans like Carnegie and the Mellons, we are bringing you market analysis, news, and everything you need to know about the economy and investing. Live from Pittsburgh, Pennsylvania, it's Check the Market.
Good morning, everybody. Live from Pittsburgh, Check the Market. How's everybody doing this morning? Ninja, Greg, Lucy, Alice, thanks for joining everybody. Logan, Charles, good morning. How's everybody doing today? Last week was okay in the market. Then this weekend, we had some news. Another bank failed. We'll be doing a deep dive into that today. What's up, Kyle? Caitlin, welcome everybody. Make sure you share the broadcast. We'll be doing a deep dive on the banking crisis. and see what's going on there. Tamara, Ron, welcome everybody. Title should draw some people in. Futures are down slightly. Everybody's waiting for the Fed meeting to see what's going to happen there. So that's one of the reasons why futures down. Crypto's down a little bit as well. Let's see if anything is up pre-market here. Oil down. Gold is up a little bit. Still just hanging on right under $2,000 an ounce. All right, well, let's get into it. Let's see what's going on this morning. And then do a deep dive into the banking crisis and First Republic, what that means for you, what that means for everybody. Thank you, Z. Coca-Cola shareholders vote down proposal that targets pro-life states. Companies have increasingly come under public scrutiny for alleged political biases. So the reason why I put this article up here is to show that as a shareholder, you're not just owning a piece of the company, you actually have voting rights when it comes to their annual meetings. So companies will put forth amendments. If you have invested, you might every now and then be getting emails from your broker that say vote on the annual report or something along those lines, and you'll be given a chance to vote on different proposals. I do this with every single company that I invest in, that we invest in. I go through, I take a look, see who's on the board, see who I agree with, see who I don't agree with, and see what amendments I like, what amendments I don't like, and then I vote based on that. Let's take a look at this article. Michael, that's exactly why I'm a little worried, is because Kramer did say that banking system is doing good. So if Kramer says the banking system is doing good, we're in big trouble. Nation of Victims author Vivek Ramaswamy argues shareholders will be the driving force to reform censorship practices in tech companies and social media platforms. Coca-Cola shareholders recently voted against a proposal to conduct a survey into how state laws restricting abortion impact the company's business performance. Shareholders request that Coca-Cola's board of directors issue a public report prior to December 31st, 2023, omitting confidential information and at a reasonable expense, detailing any known and potential risk or cost to the company caused by enacting or proposed state policies severely restricting reproductive rights, and detailing any strategies beyond litigation and legal compliance that the company may deploy to minimize or mitigate these risks, the proposal stated. The proposal was introduced by As You Saw, a nonprofit that promotes ESG policies in corporations. 87% of controlling shares voted against the measure. Voting power is allotted per the number of shares an individual or entity owns, rather than each individual having one vote. As in American elections, an entity that owns a higher percentage of shares will yield greater voter power than an entity with less. So if you didn't know this about stocks, is that if you own the stock, if you say own 10 shares of Coca-Cola, you have 10 votes. So if you would have voted in this, you would have been able to vote with your 10 shares. A lot of this has been happening, and I've seen it even in the annual reports, the proxy reports that I've been getting, that there's these small organizations that I would say, social justice, whatever organizations they want to be, that want to enact some sort of political something and bring that into the company. And what they do is, when you actually look at it, you'll see that they own 5 shares, they own 10 shares, they own, it's a relatively small amount of shares that these organizations own, and then they bring forth these proposals and shareholders vote on them. You can actually also bring forth proposals. Contact the company that you're investing in, and you can bring forth some proposal that will then be voted on at the shareholder meeting. So this is one of the nice things about owning stock, is that you actually have a say in the direction of the company as a shareholder, since you actually own a piece of the company. And I really like that about stocks. And hopefully, if you're just on the line, you haven't invested yet, you want to invest, that's just another reason for you to start investing, is because you don't actually just own the stock. Look at it as you actually owning a part of that company, and the well-being of that company is part of your job. Even if you only own 1 share, 2 shares, 3 shares, you are now an owner of said company. All right, next. The proposal, as you saw, cited research that showed women who do not... Well, we can go to the next article. That's basically all. Well, Sandra, now you know that that when you got those emails, don't ignore them, actually vote. And you can... email, or it even comes by mail. It'll say proxy on it, or annual meeting or something like that, and you'll be able to open it up and vote on it and then send it back. They all and they pay for all of that as well. Yes, Caitlin, we do have more power over these corporations than we think we do, and a lot of shareholders, they don't actually vote, and then they don't have a say in the direction of the company. But you'll be able to now that you know, you'll have a say in the direction of the company and where it goes. You can take a look, see who's on the board, because they vote on board of directors a lot of companies every single year. They'll vote on their board of directors, and you'll be able to see, is there somebody on the board of directors who you know is pushing the company into a direction that you don't want the company to go into? You can vote against that person. Exactly, Kyle. Continue. Writers Guild of America to strike for first time in 15 years after failed negotiations with studios. WGA West said the strike comes after failed negotiations with Netflix, Amazon, Apple, Disney, Warner Brothers, Discovery, and Paramount Plus. Maybe it's a good time that I saw this and I thought to myself, maybe it's a good thing. They can take some time off and rethink the movies that they're writing, because I haven't seen a great movie in 15 years, so maybe they do need a break, think about it, and then come back so they can write some better movies. Next. We can go to the next article. States revolt against Biden's disaster mortgage redistribution rule to subsidize risky loans. So I went over this a little bit last week and showed you what they're doing with this. Basically, people with good credit that have good down payments have to subsidize people with bad credit and low down payments. And the policy was set to take effect yesterday, May 1st. Let's take a look at the article. I don't think this is the last that we're going to hear of this. Biden's plan was outlined just a few weeks ago by the Federal Housing Agency and is set to take effect today or yesterday. The plan is aimed at helping lower-income borrowers afford their monthly mortgage payments. It would do so by forcing people with good credit scores to pay more each month for their mortgages, extra payments that would be credited to the loans of higher-risk borrowers. The controversial policy has been attacked by both Republicans and Democrats, including President Obama's former federal housing administrator. On Monday, financial officers from 27 states weighed in and said it was clear the policy was a mistake even before it takes effect. Continue. It is already clear that this new policy will be a disaster, they wrote in a letter led by Pennsylvania Treasurer Stacey Garrity that was sent to Biden and FHFA Director Sandra Thompson. It amounts to a middle-class tax hike that will unfairly cost American families millions upon millions of dollars. And at a time when the real estate market has already slowed considerably due to high interest rates, it will further depress home sales. So you got to think of this with somebody who has good credit on a mortgage of $400,000, they would be paying approximately $40 a month. But that's not just $40 a month, that's $40 a month over 30 years. So that would be, that's an additional $14,000 that they're paying on their house. So when you buy a house for $400,000, it's actually $414,000, not including the interest that you're paying on the house. So this is one of those policies that I 100% don't agree with. And people, watching this show, if you watch the show, I know that you want to, make sure that your finances in order and everything. You're thinking of investing, all of these things. So this definitely would affect you. If you do take out a mortgage, this would affect you. We urge you to take immediate action to end this unconscionable policy, they wrote. The state finance officers blasted the plan for turning the normal system of home buying incentives upside down by hurting people who made sound financial decisions. Continue. The policy will take money away from the people who played by the rules and did things right, including millions of hardworking middle-class Americans who built a good credit score and saved enough to make a strong down payment. Incredibly, those who make down payments of 20% or more on their homes will pay the highest fees, one of the most backwards incentives imaginable. It noted that the forced extra payments will be used to hand out better mortgage rates to people with lower credit ratings. Others have said the plan would make it easier for people with shaky credit histories to afford more expensive mortgages, a move that could put more people at financial risk. The state officials said that while they were expanding homeownership as a worthy goal, the forced subsidization of risky loans isn't the way to do it, especially in today's environment. We're talking about banks failing. Why would they think that this is a good time to bring something like this out? I don't understand it. This is, 2008 people with low credit history, low credit scores, getting loans for hundreds of thousands of dollars, buying houses. So this is not the way to do it, and I don't think that we're going to see the end of this. There's a bunch of states, 27 of them, that are now pushing back against this policy. Continue. No, this is only for new mortgages. This is not for existing mortgages. So this would be now, starting May 1st, if you take out a new mortgage, it doesn't affect existing mortgages. If it did affect existing mortgages, I'm pretty sure there would be a much greater outcry than there is right now. No, Caitlin, you're 100%. The pushback is coming from both sides when it comes to this. What they need to do is, instead of doing it like this, what they need to do is they need to invest more money in financial literacy. Why aren't there financial literacy classes in high schools? Why are we worried about every social justice thing in high school, but then when it comes to financial literacy, none of it is being taught in high school? None of it is being taught in college. It was taught in my college, but the majority of colleges don't teach it. When kids come out of college, that's the first time they have to deal with a budget when they get their first job. So this is, money would be better spent on financial literacy classes than it would be on basically one of these, take from the responsible and give it to the irresponsible approach. Yes, on a refinance, they're going to do it as well, guaranteed. No, Michael says it's almost as if there's an evil villain coming up with this stuff. Yeah, it's socialism. That's what it is. That's what it smells like. That's for sure. All right, next. All right, let's get into this. So yesterday, I'm sure most of you saw the news. First Republic Bank failed. And so we'll take a deep dive into this and see what it means for the banking industry, see what it means for the U.S. banking industry. Continue. First Republic's failure and rescue Monday is a jarring reminder that U.S. banks continue to navigate a crisis nearly 2 months after Silicon Valley Bank collapsed. But despite a speedy takeover by JP Morgan, First Republic's failure shows the banking crisis is far from over. So what happened? What's happened to First Republic? First Republic was taken over by the Federal Deposit Insurance Corporation, FDIC, at a cost of about $13 billion to the regulator. The lender suffered a flight of deposits in the first quarter of 23, leaving it scrambling to address a liquidity crunch. JP Morgan stepped in to buy the bank after regulators took control, saying in a press release that it would acquire $92 billion of First Republic deposits. Continue. Why did First Republic fail? Its core customer base was very wealthy clients who rarely defaulted on loans, but that also meant Many held much more than $250,000 deposit limit insured by the FDIC. At the end of 2022, 2/3 of First Republic's deposits were uninsured. When SVB and Signature Bank failed, these wealthy customers fled First Republic in droves for fear of losing their cash. Deposits dropped 41% to $104.5 billion in the first 3 months of this year. They appear to have fallen by another $12 billion by the time of JP Morgan's acquisition, based on the $92 billion deposit figure it cited. In addition, First Republic sought to woo its wealthy clients with very cheap mortgages when interest rates were at rock bottom, offering interest-only home loans in 2020 and 2021. This included $11.2 billion $11.2 million mortgage to a senior Goldman Sachs executive. Continue. But as the 30-year fixed mortgage rate more than doubled in the space of a year, these mortgages became far less valuable to First Republic than when they were initially offered. The combination of falling deposits and rising losses on its mortgage book doomed the regional lender. The parallels with SVB, where a large share of deposits were uninsured and losses linked to rising interest rates became untenable, were stark. What does First Republic's failure mean for other banks? The combined failure of SVB, Signature, and First Republic is a reminder of the problems affecting the banking system. The Dow Jones U.S. Bank Index has fallen about 16% since SVB's collapse because of this uncertainty. While market conditions appear to have wiped out the 3 most exposed banks, others remain vulnerable. All right, so let's take a look at this. So basically what happened is there was a bank run. And when people, when there's a bank run on a bank, banks rarely ever survive. That's just how it is. That's how it's been all throughout history. So the best thing to do in something like this is just keep your deposits in the bank, and the bank isn't going to collapse. But if everybody runs and everybody wants to be the first to pull out their money, then obviously the bank is going to collapse. So that's what happened with SVB. With Silicon Valley Bank, they sold their U.S. treasuries that they had at a loss. I think it was a $15 billion loss or something like that, which caused people to be very suspicious. Then you saw the news on Twitter, how SVB is going to fail. And next thing you know, there was a bank run and the bank collapsed. Caitlin asks, so the customers caused their bank to fail. That is correct. It looks like what happened in 1929. People got scared and pulled their money out before anything bad actually happened, but their exodus triggered the collapse. That is correct. That is what's happening, and that's what's happening with these banks. First Republic is actually the second largest bank failure in United States history. But let's keep going. Lenders' emergency borrowings from Federal Reserve increased for the second week in a row through April 27th, according to data released by the central bank. And there's still about $1 trillion in uninsured deposits held by U.S. banks. Meanwhile, higher interest rates will likely continue to strain those banks heavily exposed to bonds and mortgages. First Republic's rescue should restore some calm to the market. Indeed, shares in JP Morgan rose as much as 4.2% in pre-market trading following the announcement. Let's go to the next article. How Washington got on board with a big bank deal for First Republic. So the politicians are pulling for the banks to do deals amongst themselves instead of for the government to get involved. Do I think it's a planned scare like toilet paper? Well, it's interesting to me that all of this is happening. I'm not, most of you know me. You know that I'm not a big, conspiracy theorist. But it's interesting to me how all of this is happening right before they're releasing the Fed Now central bank digital currency. Wilson, yes, there is a list of affected banks besides SVB, and I'll get into that list here for banks that are still, markets are open, for banks that are still fairly risky. All right, let's take a look here at the markets. Dow Jones down 60 points, 65 points. The S&P down 9, and the NASDAQ down 17. Oil is down. Everything is down except for gold. Cryptocurrency's down. Bitcoin, 28,000. Let me refresh this, make sure that's right. Yep, 28,000. Ethereum, 1830. XRP, 46 cents. Cardano, 38 cents. Dogecoin, 7.8 cents. Avalanche, 16.62. It looks like Shiba Inu has dropped 2 since last week. So overall, cryptocurrency is down. The whole cryptocurrency market is down about 1.46% over the last 24 hours. Let's see the next article. Let's see it. Federal regulators wanted a strong deal for First Republic Bank. As a result, they helped America's largest lender get even bigger. JP Morgan Chase beat out bids from at least 3 smaller peers. According to people familiar with the matter, the bank said it had some 800 people working over the weekend to scour First Republic's books and assess its business. JP Morgan was the only bank with the appetite to buy substantially all of First Republic at a competitive price, the people said, including mortgages that other banks didn't want. That was a priority for the Federal Deposit Insurance Corporation because it removed uncertainty over any assets left behind that it would have to sell. Continue. Some politicians and regulators have become concerned that growth and consolidation have created banks that present risks to financial stability. Officials have sought to put new limits on bank mergers to prevent large banks from getting even bigger, which they obviously failed with JP Morgan because JP Morgan now owns, I think, $2.4 trillion in deposits or something like that. I mean, it's by far the largest bank in the United States. But with the First Republic sale, they set those concerns aside, a recognition that the largest lenders possess unmatched firepower to step in during times of financial stress. The recent bout of banking turmoil is poised to help the largest banks grow, which it has. So what has been happening is the banks where the withdrawals have been happening, like First Republic and others, all that money is being taken out of regional banks and being put into accounts at PNC, at Bank of America, at Citigroup, HSBC, Wells Fargo, Truist, and JP Morgan. So that money is being taken out of small and regional banks that would be considered, not too big to fail, and they've been put into banks like this that are too big to fail. Because if JP Morgan had a rush on its deposits, the federal government would step in 100% because that is the largest bank in the United States, owns more than 10% of all deposits in the United States. Continue. Question from Dennis. Dennis asks, is it good to buy gold and silver? Yes. I personally always like to have a little bit of gold and silver, and I do own gold and silver. And I allocate a small portion of my portfolio to those precious metals. And so I actually buy physical gold and physical silver. I buy them on JM Bullion and American Precious Metals Exchange, or APMEX.com. That's where I buy mine. You pay a premium for it most of the time because there's less supply. The largest U.S. banks grew rapidly in the decade after the last financial crisis, benefiting in part from the presumption that they were too important to the financial system to be allowed to fail. They became fabulously profitable, putting them in position to weather the regional bank meltdown of the last 2 months and even thrive. JP Morgan led a group of 11 banks to temporarily rescue First Republic in March by depositing $30 billion at the bank to help replenish the money that customers withdrew in the panic after 2 mid-sized banks failed in one weekend. The growth has stirred concerns that big banks have become too powerful. The Biden administration and some FDIC officials have taken a skeptical attitude towards bank mergers that could accelerate their growth. Senator Elizabeth Warren, a big bank critic, said the deals show that the problem of too big to fail banks has gotten worse. She told the Boston Globe that regulators shouldn't have allowed JP Morgan to buy First Republic. Continue. That might not be the best idea, Josh, to buy your gold and silver on eBay. Oh, that's awesome, Charles. Yes, Wilson. When we do start the proposed credit union, that you will be able to. It's going to be a federal credit union, and so you'll be able to sign up via the internet for an account. All right, next article. Let's see what else we got on this bank failure. Jim Cramer, Inverse Cramer. The collapse of First Republic Bank could mark the end of the banking crisis. Sometimes he just needs to stop. So hopefully he's right. Hopefully this is one of the 20 or 15% times when he is right. Continue. Andrew Lockenoth, he's one of the guys that I follow on Twitter. This is going to be a thread of one of his tweets. I thought it was interesting. First Republic Bank will likely be seized by the FDIC tomorrow. So this was April 29th, and they did get seized. Will there be more failures? I've worked in banking 10 years, so let me explain why this happened and what it means and how it impacts you. Let's see it. First Republic Bank had a lot of uninsured deposits, a high liability to deposit ratio, and credit downgrades. FRC had weak risk management practices. That's usually one of the most common factors in bank failures is weak risk management practices, failing to effectively address interest rate and liquidity risks. FRC was a ticking time bomb. This led to billions of dollars in unrealized losses arising from securities and loans on its balance sheet. FRC was hit hard by the increase in interest rates, which led to a sharp increase in losses. On Monday, First Republic revealed that deposit outflows totaled $70 billion in Q1. FRC primarily serves high net worth individuals and their businesses and offered large mortgages at ultra low rates, so exactly the same as Silicon Valley Bank. Many of the bank's clientele exceeded the FDIC limit of $250,000 per account. Nearly half of the bank's $104 billion in deposits were uninsured. So with the rise, this is also another reason for why this happened. With the rise in interest rates, treasuries have become more attractive to investors. So if you have a couple of $1 million sitting in a savings account that's getting you 1% interest rate, why don't you just buy short-term treasuries, 1 year, 2 year treasuries, if you're not going to touch the money anyways, and get 4 or 5% on it? So that's one thing that was happening, and that led to an outflow of deposits and an inflow into U.S. treasuries. Let's continue with the tweets. Banks do not have all of the money their customers deposit on hand. They use some of that money to make loans and investments. If too many customers try to withdraw their money at the same time, it can cause, and almost certainly always will cause, a bank to fail. This is called a run on the bank. FRC also issued many loans that are now underwater, having been made to borrowers who could not afford them, and First Republic is now responsible for covering these losses. Many of FRC's assets are illiquid, mainly comprised of jumbo and super jumbo interest-only mortgages. First Republic gave out a lot of fixed-rate mortgages, and when interest rates go up, the value of these loans goes down. By the end of 2022, about 2/3 of the bank's loan portfolio was fixed for at least the next 5 years. That's a lot compared to other banks. Continue. At the end of 22, First Republic Bank estimated the value of its loan portfolio would decrease by $22 billion because of this. First Republic Bank also had a lot of low-yielding assets, which hurted profitability. So First Republic Bank probably bought treasuries when they were at 2%, 1%, somewhere around there, and they had those on the books. And because they're low-yielding compared to what it is now, that's one of the reasons why Silicon Valley Bank failed. First Republic's profitability was negatively impacted by its low-yielding assets. Similar to Silicon Valley Bank, FRC had a lot of held-to-maturity securities, which are investments that are not meant to be sold. These securities declined in value as interest rates increase. FRC held a significant portion of its held-to-maturity securities, accounting for about 1/8 of its total balance sheet. At the end of 22, First Republic had an unrealized loss of $5 billion on these securities. Also, FRC's uninsured deposits were 70% as of December 31st. Continue. As of 12/31, FRC estimated that its assets were worth $30 billion less than their carrying value. In the first quarter, deposits declined over 40%, with most withdrawals coming from accounts holding more than $250,000, which are not insured by the FDIC. Since the start of the banking crisis last month, FRC shares are now down over 95%. It looked like some sort of cryptocurrency crash when you look at the chart. FRC traded at $150 in February and is now under $5. Once valued at $40 billion, the bank's market cap is now approaching $500 million. FRC insiders have been actively selling shares this year, with sales on January 17th, 18th, 19th, and 20th. So just before it collapsed. They always get out. Continue. Which is why it's important to take a look at insider trades. When you invest in stocks, always look at insider trades. Are the insiders selling or are they buying? We can keep going. Be careful who you take investment advice from. Last month, Jim Cramer said FRC was a good bank, of course. So, common denominator, Jim Cramer. FRC has since fallen 95%. Don't forget, he also said to buy Bear Stearns in 2008 and Silicon Valley Bank stock at $320. Continue. Shareholders have filed a lawsuit against the bank, claiming that it provided misleading information about its financial stability. The lawsuit alleges that First Republic Bank and its auditor KPMG misrepresented the bank's balance sheet and liquidity strength. Since March, these banks have failed. First Republic, 14th largest U.S. bank, Silicon Valley, 16th, Signature Bank, 29th, and Credit Suisse, 45th. And all of these banks have the same clientele. All of these banks have its high net worth individual clientele. So a lot of deposits are uninsured. So this is from Michael J. Burry, the Perma Bear. So these are all the banks, FRC, SBNY, SIVB, that have failed. And there's some others, CMA, USB. I know that PACW, Pacific West, is one that's that they're saying is not doing so good, so that could be a potential failure at some point. But my advice is keep your deposits in the bank, don't take them out, and the bank's not going to fail. Continue. To protect yourself, never keep more cash than what's covered through FDIC insurance with a bank. Dividing your deposits among several banks can minimize your vulnerability to the failure of any one institution. In a failure, the FDIC reimburses up to the insured limit, which, if you have a business or if you're a high net worth individual, is easier said than done. JP Morgan Chase looks to be the highest bidder for FRC. Okay, so that's not relevant anymore. Let's go to the next one. We can go to the next one. If your bank CEO dresses like this, your bank will probably survive. Not gonna lie, the best financial advisors I've come across, they dress like that. They know what they're doing. Continue. All right, we've already seen. Oh, let's take a look at it. Do I have the video? All right, let's play it.
Since we've already seen some members of Congress who have had what seems like particularly good luck offloading shares of First Republic Bank and turning around and buying shares of JP Morgan.
Look, I'm not going to speak directly to that. I have not seen those reports. I get what you're saying.
Let's play it one more time.
Since we've already seen some members of Congress who have had what seems like particularly good luck offloading shares of First Republic Bank and turning around and buying shares of JP Morgan.
Look, I'm not going to speak directly to that. I have not seen those reports. I get what you're saying.
So, if you want to be one of the greatest traders who ever lived, run for Congress. They have all the best information, and a lot of it's coming out every day. I see an additional member of Congress that sold their shares in First Republic in early March and turned around and bought shares of JP Morgan. So it's almost like they knew what was going to happen, but obviously they're just going to say it was their financial advisor. So whoever their financial advisor is, give me a call, because I will give you my entire portfolio and I will let you run it. I'm not going to ask any questions, but that would be great. So she couldn't even deny it, which I thought was funny. She said, I understand what you're saying. Like, at this point, it's so obvious what they're doing. But it was their financial advisor. That's going to be their excuse. So whoever that is, please give me a call. I would love to have you as my financial advisor. Continue. First Republic Bank was the second largest bank failure in U.S. history. Only Washington Mutual was bigger. Which in 2008, when I first came to the United States, that's who I opened up an account with right before they failed. So JP Morgan bought them out, but Washington Mutual, that was the first bank account that I had in the United States when I was here. My little WAMU credit card. So that was assets at time of failure, $229.1 billion. Washington Mutual, $307 billion. And then you have Silicon Valley as the third largest and Signature Bank as the fourth largest. Now, mind you, this doesn't include investment banks, so that's why Bear Stearns and Lehman Brothers aren't up there. This is just regular banks. So far, 3 in 2023. Continue. Here's what's next for bank stocks after failure of First Republic. Let's take a look at it. I haven't seen this article. The seizure and sale of First Republic Bank over the weekend closed the book on the most glaring problem left from the U.S. regional banking crisis, but now investors will turn to see if any new stresses emerge and evaluate whether mid-sized banks can become good bets in the future, because some of them are very, very well priced. So if some of these banks can weather this storm and not fail, I think there's good opportunity in buying their stock. First Republic's demise was the third regional bank failure since early March, when Silicon Valley and Signature Bank unfolded within days of each other. There is cautious optimism on Wall Street that First Republic will be the last failure of this period. We believe the FRC sale should likely end forced sales of banks due to deposit flight, although there will be likely other banks that may experience profitability challenges, causing management teams to evaluate strategic options. Bank of America analyst Ibrahim Poonawala said in a note to clients. The First Republic's final sale came after its first quarter earnings report showed a 40% drop in deposits. However, reports from other regional banks weren't nearly as dire, with many reporting that deposits had stabilized and were growing again. For example, PacWest, which was also on that list, which has seen a potential area of stress after SVB's collapse and whose shares fell more than 10% Monday, said last week that it had brought in about $1.8 billion of deposits since March 20th. Continue. The seizure and sale of First Republic Bank over the weekend closed the book on the most glaring problem left from the U.S. regional banking crisis, but now investors will turn to see if new stresses. I already read this. Continue. The effect of SVB and other recent failures on the broader banking system is far from fully realized. The Federal Reserve report on the bank's collapse hinted at regulatory changes that could make life tougher for mid-sized regional for years to come, of course, because the Fed wants to become a bank itself. So why not just take out the competition? We believe that banks with assets of greater than $500 billion that are less than 500 billion and greater than 60 billion are the clearest winners in the New World Order, while there is likely to be no man's land between 80 to 120 billion, as banks in this range may need to shrink to avoid new regulations or become more actively engaged in mergers and acquisition to increase scale and absorb regulatory costs. The regulatory shifts could create a wave of asset sales and small deals as banks try to adjust to a new rulebook. Expect regional banks to likely respond by reducing capital returns, optimize lending, and potentially dispose of assets to strengthen capital. Continue. To be sure, the rapid deposit flight in March showed that the financial picture for banks can change quickly in the digital age. Commercial real estate concerns could be one of the areas that causes bank stress, with Charlie Munger among many investors warning the public about that sector. So Charlie Munger, actually, that was this weekend, I believe. We don't believe that regional banks are completely out of the woods, so we'll see what happens there. We'll keep an eye on it here on Check the Market for sure. Continue. Individual investors are so bearish, it's a contrarian buy signal that should mean a 15% gain. By Yun Lee, let's see it. Sentiment among retail investors has been almost as bad as it was during the Great Financial Crisis, and that has triggered a reliable contrarian buy signal that points to a double-digit rally ahead. The weekly American Association of Individual Investors survey, which polled individual investors of their thoughts on where the market is heading in the next 6 months, has indicated a level of bearishness that's close to the level during 2008. Depressed levels of retail investor sentiment are sending a strong buy signal for U.S. equities again. Lori Calvasina, head of U.S. equity strategy at RBC, said in a note. Continue. The strategist said the S&P has climbed 15% on average in the 12 months after a threshold of negative 10% is crossed in its gauge, which looks at the 4-week average of the bull-bear spread of individual investor sentiment. The gauge stood at a negative 14.4% as of Thursday. Retail investors have been dumping equities in the face of raging recession fears that have been stoked by rate hikes and a banking crisis. So are we at capitulation? That's a good question. Honestly, nobody can time the market. If they could, they would be the richest person that ever lived. The good thing to do is what I like to do is just follow Warren Buffett and Charlie Munger and just keep investing no matter what. Have a long-term outlook and you'll keep making money. Caitlin asks, would a mid-sized bank be an investment consideration? What's an example of a mid-sized bank? First Republic was a mid-sized bank. Citizens probably would be a larger one. Pacific West would be one. What's it called? I can't think of any right now. What's the one around here called? Ben, who do you bank with? You bank with PNC. PNC is a large bank. What are some of the ones around here called? You got Citizens, Huntington Bank. Bank of America is large. Capital One, that's a large bank too. It would be more regional banks. They, whatever the regional bank is in your region. They can span several states. They're usually regional, so it would be like a bank in the Northeast or the Southwest or something like that, but that's usually what it is. Yeah, Westbanco. Westbanco would be one around here. All right, what else we got? What the bankers are actually worried about. What are they worried about? Let's see. Bankers are usually always worried. So there's tension in the air as this year's confab of financiers and business leaders starts on the same day that First Republic fails in a government-backed takeover by JP Morgan. Just a bit of unpleasant housekeeping, many of the attendants at this year's conference say. No one likes to see a bank fail, But that said, it's good to see the last remaining source of uncertainty resolved today. Citibank CEO Jane Fraser told a packed ballroom during the conference kickoff, "We should all feel pleased about that." Okay. Fraser said the US financial system is very solid. I would agree. Perhaps next to Switzerland, one of the most solid banking systems in the world. It's still where the majority of people invest their money, the United States. First Republic's demise follows the failure of 2 other banks. 3 banks have failed, totally predicted. But continue. Americans don't need to worry about a cascading series of bank failures, but the 3 failed banks are already setting off a series of repercussions, likely to include a sharp cutback in lending that will slow growth. The implications are going to be pretty profound. David Hunt, CEO of asset manager PGIM, said on the kickoff panel, "There's going to be a real ratcheting up of regulation in the banking system that'll further hinder the supply of credit going to the economy. We're going to see a real slowing of aggregate demand. Behind the scenes, more money is flowing out of traditional banks and into other institutions that comprise the shadow banking system, private equity firms, hedge funds, non-traditional lenders, and so on. The big, well-known firms aren't showing unusual signs of stress. But there's a lot of scuttlebutt about mid-market firms that could get squeezed by rising rates and falling asset values, just as those 3 regional banks. First Horizon, Caitlin. It just came to me. First Horizon Bank, FHC. They're one that I invested in, so that would be considered a regional bank. So if there is some kind of crisis, the odds of a government bailout are low, unless, the bank has some serious Democratic donors, then there'll probably be a bailout. But that's just conjecture, who knows? Continue. There's always a political specter haunting the Milken attendees. This year it's the debt ceiling standoff between Republicans who want to slash spending in order to raise the federal borrowing limit, and Democrats who say raise the limit and talk about spending cuts separately. We don't pick up the phone and tell the politicians what to do, but we do lay out the consequences. No, you actually do. Fraser, listen. Let me talk to you about this. You can actually do that. You can actually pick up the phone and tell the politicians what they do because they work for you. This is not a monarchy or a dictatorship. So you are wrong. And if you are watching, you can actually go online, go to the congress.gov, and you can look up the phone numbers of your congressmen and senators, and you can pick up the phone and literally tell them what to do. There's a loose consensus that market have not priced in the disruption that might be coming as debt ceiling bargaining goes down to the wire this summer. Janet Yellen came out and said that the US government might be out of money on June 1st. So let's hope they actually get some work done instead of just sitting around DC and eating and drinking. The markets love to believe politicians will be rational, but what if that's not true this time? The market doesn't handle these kind of situations well. That is true. We're working on that more than some of the recession scenarios. Continue. Inflation is on everybody's mind, as it has been for the last 18 months. Sure, it's coming down, but the Fed may soon enact its last interest rate hike for a while. But some important global trends could keep inflation higher than Americans are used to. Deglobalization, reshoring, protectionism, and industrial policy, which are all good things. A lot of deflationary forces are basically behind us. The co-chief investment officer of Bridgewater Associates said everything that was made in the cheapest possible place is now moving the other way. That means we're producing stuff that's more expensive. Decarbonization is great, but in the medium term, it's not saving any money. A world of higher inflation means higher risk premiums, higher real rates. Most investors have very little inflation protection. Bank failures, yeah, but there's plenty of other stuff to worry about as well. Man, they got a lot of things to worry about. Thank goodness that I don't have to worry about a lot of that stuff, because I invest for the long term. So 10 years from now, who cares what happened? Continue. JP Morgan shares pop after bank takes over the embattled First Republic. So we already went over that, but JP Morgan getting a great deal there. Continue. No, we can go to the next one. That's it? All right, well, that's it. I do not have any stock tips for you today. I was looking all week for something to buy last week. I couldn't find anything, just sticking with what I have right now. And I didn't find anything that I could in good conscience give you as a good investment. But gold and silver, we talked about that today, always a good investment. That's something that you can hold for the long term, for the very long term. Caitlin asks, do you think the Fed is going to increase rates again? Yes, I believe they will. I can do that, Caitlin. I'll look into that. It's APMEX, Ninja, APMEX. Those are, that's where I get silver and gold. All right, well, thanks for tuning in this morning. If you'd like to invest in Revival today, I'll give you an opportunity to do that now. Here are the ways that you can do that. Just remember, investing in the kingdom of God is the best investment that you can make. It's where I've seen personally in my life, I've seen the biggest returns. Here are the ways that you can do that. Cash App, Venmo, PayPal, Facebook, text to give, cryptocurrencies. You can scan that QR code. And you can send it to Revival Today, P.O. Box 7, Prosperity, Pennsylvania, 15329. Then claim your offer, which is still The Psychology of Money. If you don't have that book, we'll send that to you as our way of saying thank you. Do you have the picture of it? Thank you, SJ. I like the music too. It's super calming. Thank you, Caitlin. And thank you, everybody, for tuning in. Make sure that you share the broadcast with everybody who's interested in finance. I enjoy doing this every week, and I'm glad that you all tune in. Markets are down. They've taken a beating now. So we'll see what happens after the Fed makes their decision on what's going to happen today. I will see you all next week. Go out there and make some money today. See ya.